Yeah, fantastic. Yeah. Thank you, Holly. My name is Rami Mtewa. I am one of the sales manager in Chesterton's in the Middle East in Dubai. Basically, we have been working for a while in the international market here in Dubai, but the company has been in the market since 1805, so it's more than 200 years. Between us as a team, we have got the knowledge, we have got all the information to help you to get you dream home in UK, and Suhail here as well. He's able to help you to understand the mortgage process. I'm happy to answer all your questions in Arabic and translate in Arabic as well. And if you need any more information, we will leave our details and we will be able to contact each other later. Thank you. Uh, Back to you, Sam.
Perfect. Thank you very much, Rami. Exactly. So me and Rami are on the same team. I'm the senior sales manager on board. I've been in the region over 7 years now, helping our clients from this region purchase back in the UK, internationally, and all over the world. So yeah, we're based here in Dubai office, and we're here to help all of you guys and clearly understand from this webinar how you can go about purchasing with a UK mortgage. So obviously I'm here to help you guys afterwards, and we're going to be introducing a project quickly to you at the end as well. So thank you very much for joining. Over to you, Sahel.
Yeah, hi, lovely to speak with you all today. So my name is Sahel Yassin from Springtide Capital in London, and I head up the Springtide International division of the business. We focus and specialize in arranging mortgages across a number of sectors for our non-UK clients. So I'll run through my segment of the presentation, should last approximately 15 minutes. So I'll touch upon 4 key areas. Firstly, just an introduction on Springtide Capital, our service, expertise and process. High-level update on the mortgage market post-COVID, COVID-19, and some key facts for non-UK borrowers. We'll then apply those key facts and figures to a couple of case studies. Case study 1 will be buy to live, and case study 2 a buy to let investment. So Springtide Capital. So we are one of the UK's leading mortgage brokers. We cover all areas of property finance, and we work with the entire market of lenders, which typically includes mainstream banks, private banks, international banks, and building societies. So our role is to understand your requirements and then formally research, recommend and arrange the most suitable, most cost-effective mortgage. As I've mentioned, Springtide International, head up by myself, we focus on our clients from overseas. Primary markets tend to be the Middle East, Far East, and the subcontinent, but that is expanding every year. Importantly, as a firm, we are authorized and regulated directly by the Financial Conduct Authority. Right, so our service. To expand upon that, I'll just cover off our sort of 5 or 6 key areas that we can assist you with. The first is own occupation. So this is arranging mortgages for a non-UK resident, be they a foreign national or a British expat, buying a property in the UK for their own use, be it a holiday home, second home, or more often a child studying in the UK universities. Second most popular area is buy-to-let investments. This can be a single asset or a portfolio of properties, anything from 5 to multiple. We can also assist in Sharia compliant finance. It's a small but growing sector in the UK and is possible for both buy-to-live and buy-to-let. We can also assist our clients buying property in the commercial sector. That can be trading businesses or investments. We can assist clients, and this is quite typical for our non-UK borrowers, in arranging finance for a range of structures. So anything from personal name to UK or non-UK offshore companies, special purpose vehicles and trusts, and that can also include multi-layered structures. And finally, we can assist with development and bridging finance if required for our overseas clients as well as our UK clients. So our process, we recommend to all buyers, you'll meet with the agent first, but we recommend that you seek a mortgage broker like ourselves, our service, from the outset of your search. It's important because then the broker can outline the key facts and figures for you and work with you whilst you're viewing properties and update you with the market of interest rates. So our process, we try to keep it as streamlined as possible, and it's linked to 5 steps. So the first, our brokers would very quickly have a 15-minute phone call consultation, obtain your details, and then give you instant feedback on the key facts and figures for you to take away. They'll then go away and do their thorough and formal research, inquiring across the market of lenders, and come back to you with a proposal via email for consideration. If the terms are acceptable for the borrower, we then ask you to fill out one form and provide one list of documentation. And from there, we would present that to the bank and formalize your agreement in principle. That is an important stage because in particular with new build, off-plan properties, having the agreement in principle give you comfort on the funding, be it 6 or 12 months later down the line. And just on the documentation, on a very high level, that typically includes proof of ID, proof of address, proof of income, bank statements, proof of deposit. The fourth step, once you've had an offer accepted and you have agreed a property deal, our brokers will then proceed to submit the application and manage that through the entire process. So that's credit, underwriting, approval, valuation, offer, and completion. So we'll project manage the entire process and keep you updated as we progress. And step 5, and really importantly, the way Springtide view this, it's a long-term relationship. So as long as you have the mortgage, your broker will be in contact, and we proactively contact you at the right intervals to discuss securing a new rate, and that may be from the existing lender or refinancing, with the overall objective to ensure that the interest liability is minimized throughout the term. So that's the 5-step process. I'll then just move on to a summary, high-level update on the key facts and figures and post-COVID-19. So the good thing post-COVID is we can say is due to the restrictions imposed by the EU and the UK post-2008 credit crisis, the UK banking sector is very well positioned in the current crisis. There is a lot of liquidity and keen interest for banks to continue lending. There is no banking contagion, and in fact, the cost of borrowing for banks has come down, so the profit margins for lenders has increased, and they have passed that on to borrowers in lower interest rates. Due to operational issues, however, there are some banks which suspended lending, and they are slowly coming back to the market, and we'd expect to see that happen in the next phases of the easing of lockdown. We've already seen 2 or 3 come back, and we hope the rest will in the next 6 to 8 weeks. But overall, there's no sort of major concern from a mortgage availability and mortgage interest rate post-COVID. The key market rates, this gives you indication on what is happening. The Bank of England base rate was reduced to 0.1% and remains at that level, which is the record low level, and that was cut from 0.75% pre-COVID. The 3-month LIBOR, which is the interbank borrowing rate, is now also at a record low level of 0.2. And I've included the swap rates there for 2, 5, and 10, just to give you an idea on how cheap funding is for banks at the moment. And this is the cost of borrowing for lenders to borrow on the wholesale market. So you can see there, for them to borrow and lend money for 2 years is only 0.2%. So as I say, that has been passed on in lower rates to borrowers as well. Okay, so moving on to the non-UK residents. So this is important to say. I've included some sort of high-level key facts for non-UK borrowers, but it is going to be case-specific and client-specific. But some of the key points are loan-to-values. So if you're buying a property for your own use, the maximum loan-to-value is 85%. Depending upon the loan size, that could be lower, but generally 75% is achievable. If it's a buy-to-let, then 75% is the maximum, but that is also the same for UK residents. The amount you can borrow is based upon your overall affordability, and that does vary between lenders. As a rule of thumb, as an indication, you can borrow 4 to 5 times your income. And that would be your global income, global liabilities. If it is a buy-to-let, the rental income can be included to support your affordability. As I mentioned earlier, we can arrange finance in different structures, so it can be in personal names, in company and SPV names, and also there are some banks that allow a sole proprietor, joint borrower, which is sometimes quite of interest to our non-UK clients, meaning the property can be in one person's name with a guarantor joint borrower on the mortgage. And then typically the maximum age across the market is up to 75 years. Some lenders may go to 70, some can go beyond 75, but it again will be case specific to understand the client's occupation and the continuation of their income beyond that age 75. Interest rates, unlike other parts of the world, I know like in the US and Northern Europe, you typically get a long-term fixed rate. The UK is quite unique, that it's a highly competitive industry with over 300 banks lending in the market. So how the interest rate options work is you can choose. You can have a fixed rate for a period of 2, 3, 5, or maximum 10 years. There are no fixed rates available beyond 10 years. Or you can have a variable rate, and that is where your interest rate will track either the Bank of England base rate or the LIBOR rates in the market. When we give you proposals, we would typically give you the best of each category and have a discussion to see what suits your preference. So those are the sort of key points on a high level. But as I say, this will always be very much case and client specific. The purchase costs, just to cover off your sort of key costs that you will incur when buying a property. The 4 main ones will be your legal fees, the solicitor's fees, which you'd pay to solicitor. Valuation and survey fees, you would maybe do one separately, but the bank will insist upon one for their own purposes at your cost. And that's a basic mortgage valuation. Their own fees, the bank and product fees, and that will vary depending on the type of loan, but it could be anything from a flat fee of 999 to a percentage fee of 0.5 to 1% of the loan. And then finally, your stamp duty land tax, which is your most significant cost of buying property in the UK. So the table below gives you a summary. You can see there are 2 columns. The first column is residential. So that applies to persons buying property in the UK for their own use. And the second column applies to persons buying UK for their own use as a second residence or as a buy-to-let. The key differentiation at the moment is that any person, and this is important to say if it's UK or non-UK, if they're buying a second residence or a buy-to-let property, there is additional 3% surcharge added to the standard rate of stamp duty. So those tables outline the levels per value of the property. Another sort of key point is that Rishi Sunak, the Chancellor, in the last budget pre-COVID, announced they would be applying an additional 2% surcharge to non-UK residents buying property in the UK, but that is proposed to come into effect April 2021. So any purchases and completions done prior to that, this level of stamp duty would apply. And in our proposals that we would send to you, we would outline to you the exact figure per value of the property, which you can see shortly in the case studies. Which we'll move on to. So case study 1, this will just put into context now what I've just sort of mentioned on the facts and figures. So this is a £500,000 purchase price with a client buying a property in the UK, not as a second home, but as a first home for their own use and family use. So purchase price of 500,000, using a 75% loan to value mortgage, 375,000 would be the bank's contribution, and your contribution, your deposit, the 25% equates to 125,000. That's the purchase outline. Moving to the purchase cost for this case study. You can see here the stamp duty equates to £15,000, which is effective rate of 3%. I've estimated approximately £3,000 for legal costs. The particular bank that we're including in this case study offers a free valuation, so there's no cost there. The bank fee is relatively low at £999. So overall, your purchase cost would be £18,999. And then as you can see, the stamp duty is the main factor there. So your total required cash, your equity, your contribution would be the purchase cost plus the deposit. And at the second table, you can see to buy a property at £500,000 for the purpose of your own use, your total outlay, if you're borrowing £75,000, would be £143,999. So the mortgage terms, importantly, the key question clients ask is how much will it cost to borrow? So 2 columns here, well, 3 columns, but 2 columns of illustrations on terms. So I've included a 2-year fixed rate and a 5-year fixed rate. And here you can see the difference, which is quite narrow at the moment. But if we talk about the 2-year fixed rate, first of all, £375,000 mortgage currently will cost you a very low rate of 1.24%. I've structured this on a 25-year amortizing basis, so capital interest repayment, and your monthly payment for that loan would be £1,454 a month. Again, bank fee 999, free valuation, which we've covered off in the purchase costs. It is important to note that if you meet the lender criteria, it is possible to have an interest-only loan, which will result in a much lower monthly payment. On the 5-year fixed, you can see the rate increases marginally by 20 basis points to 1.46%, and that equates to $14.93 a month. So when we're having our consultations, we can discuss the pros and cons of a 2 versus a 5-year, but the 2-year in summary will give you access to the lowest cost of borrowing, whilst the 5-year for a small increase will give you stability and protection against possible rate rises over a 5-year period. For information purposes, if we did fix it for 10 years, which isn't very common in the UK, the rate increases to 3.14%, so relatively expensive. So we move on to the second case study, which is the buy-to-let. We've done this on a 350 value to match Chesterton's property, which they'll talk through. 350, again, a 75% loan to value mortgage, 262,500. So your equity, the 25%, 87,500. Purchase cost will look a little bit different now to the residential case study. And the main reason is the stamp duty. So here you can see the stamp duty increases to 5.1%, although it's a lower purchase price. And that's because it includes the 3% surcharge. So 18K stamp duty, again, 3,000 estimate for legals, a valuation fee, basic mortgage valuation fee would be £500. The bank fee, buy-to-lets at the moment is typically a percentage fee, and this bank is 0.5% of the loan, which equates to 1312. So your total cost 22,812. Again, similar, the bottom table outlines your total contribution, which would be 110,313 to cover the costs and deposit. So the mortgage terms, so even for UK residents, typically buy-to-let funding is more expensive than your own occupation funding. It's just the nature of the loan and the cost of borrowing and the competition between banks. It is important to say at this point that some of the non-UK lenders who do buy-to-let offering to non-UK residents are some of those that have suspended lending. But as I say, they will return and hopefully in the short term. But if we were to include those banks pre-suspension, interest rates for a buy-to-let were closer to 2 to 2.5%, so much more competitive. But of course, speaking today, I'd rather give you what's available. So this mortgage terms would be available today at 2-year fixed, 3.34%. Interest-only payments would equate to £730 a month, and the bank fee £1312. So that's a typical current availability for buy-to-let non-UK resident borrower. So that's a sort of nutshell, and that's a sort of format in how we would give you the proposals. As I say, all these things will be case specific and client specific. We maintain the relationship and would update you of any changes and improvements in terms of availability. And as I say, we recommend you seek our service at the outset. I'm happy to give the consultation and proposals and answer any questions and answers after this presentation. So pleasure speaking with you, and I'll hand you back to Simon.
Fantastic, thanks, Sahel. That's great. Gives us a good overview. So just to give you tie it into a property that's been very popular with us and is one of our highly recommended purchases right now in the market. This is Signia Court. So this is in Wembley. It's a prime location in Zone 4, so commutable into central London within 30 minutes on the overground and underground as well. We really like this project as well because it's not a huge amount of units in there. It's 8-storey building and it's physically there as well. This picture that you see is there. It's a real photograph. So, and then moving on to the next point. So there's only 39 apartments. There's 2 retails down the bottom. One's been taken by a law firm at the moment as well. 17 car parking spaces. They're on approval with a few particular units as well. Completion is Q4 2020. The whole property is completed. We're just waiting for sign off with the COVID thing that's in situation. So yeah, it's pretty much ready to go, and all the units are finished. So just moving on to the next slide. One of the reasons we love this property is Zone 4. Obviously, you're getting good value for money. Very commutable, but Wembley is fantastic because it's got obviously a huge amount of history with the Wembley Stadium. It's got a buzz about the place. There's a huge amount of retail there, including, you'll see point number 14 on the map is London. It's the
London Designer Outlet.
Exactly, the London Designer Outlet. So people are going there on a daily basis to have a day out. And that means, obviously, if you're for the residents and the tenants there, it's just 2 minutes away from Signia Court. You can see the logo of Signia Court. It's just across the road. So you've got a huge amount of retail there, shops, coffee shops, and a nice vibe about the place. In the area, you've got a lot of greenery, huge amount of education, but mainly as well, you can see there's a huge amount of tube stations. You've got Wembley Park, Wembley Stadium, and they give you immediate access into central London very easily. So really, really popular area for people to be buying as investment for long term. You're going to get a strong tenant in there as well. So moving on to this, you can see the building there itself. It's there. We've had quite a lot of transactions on this building already, but there are some good units here which we will be advising you on as well that tie into these figures. And for example, this unit here, fantastic 1-bedroom, 375,000. That ties in really nicely to what obviously Sahel was mentioning. You've got a nice easy payment plan. You'd secure it with 2,000, 37,500 would be the on exchange. And then you can see once you get the mortgage all sorted out, the rent per week is good as well. You get £350 per week. Good stable yield there of 4.85% because the service charge in this building is low because there's not a huge amount of facility, so perfect for a buy to let. If you go on to the if obviously you see the stamp duty, the main things that we wanted to point out on this is looking at option 1 of the interest. If you go to the next slide, Holly.
Yep.
The main thing we wanted to point out on the next slide, Holly. If you go to the next slide.
You see it now?
Yeah, perfect. That's the one.
Okay.
So if you were doing a loan amount there on a 25-year term, buy to let 2.85 is looking at the cash, the available cash. So interest only, it'd be £445 per month. So the rent you're getting would be around about £1,500. So the mortgage is £445. You've got a low service charge. So your net income, so physically in your pocket, you're still getting £954 liquidity each month. So that's fantastic. That's really works well. And if you go to the next slide, this is the actual unit itself. Brilliant 1-bed, south-facing, really easy to rent these units. We can help you rent them with our local teams as well. We can fully manage the property, so it's pretty much a hands-off investment, which is what you want. You've got good facilities and amenities. You've got everything on your doorstep. It becomes fully ready to go, even with the curtains. You've got Bosch appliances, so it's a very good, easy investment. If you go to the next slide as well. Oh, that's it. Yeah. So that's just a very quick overview of one of the products that we highly recommend. So if you've got any questions on that, get in touch with us. There's many more things that we can advise you on. So just encourage you to get in contact, and we can find what's best fits you. Thank you very much.
Thanks, Simon. Thanks, Rami, and thanks, Sahel. That was really informative. We have got some questions, so I'll put them out to all of you, and Sahel can probably answer, but also Rami and Simon are here. So this one is quite easy. So can UK banks lend mortgages on properties in all zones in London, and how about properties in Manchester or Liverpool, for example?
Yes, good question. So majority of banks don't have any geographical restrictions. It will be entirely down to valuers' comments. So if the valuer feels the property is suitable security, then it can be in Manchester, Liverpool, Birmingham, etc. There are 1 or 2 that will have an M25 limit, but that's, as I say, 1 or 2. But the majority can lend across the UK, subject to valuers' comments.
Great. Thank you, Sahel. And then we've got another question here. As a non-UK resident investing in the UK, is my rental income taxed?
So that would be your accountants and tax advisors' formal advice. However, what I can say as a non-regulated tax advisor is that if the property is in your personal name and the income is earned in the UK, then it is liable for taxation. Some non-UK clients acquire properties not necessarily to avoid tax, but through offshore companies, then the taxation would be different. If you buy the property through a UK limited company, then again, you still pay tax, but it would be corporation tax. So there are differences in taxation through personal name, UK company, and offshore company. We can provide the mortgage terms for all three scenarios, but as I say, you would get your formal advice from your tax advisors and accountants, not a mortgage broker.
Okay, thanks. Another one, is it easy to get a mortgage as a non-UK resident, and what are the most common banks that offer mortgages for international investors?
So easy is a good question. Bureaucracy in the UK post-credit crisis for mortgages is high. So all banks would need to know who you are, where you live, prove your income, assess the affordability, and assess your bank statements for your conduct of your account. So the level of detail is relatively high in that regard. But we say to clients, if they provide us all the information up front, all the documentation, our job is to assess that and make sure we present it and package it to the bank in the most efficient manner to ensure that it goes through the system and gets agreed. So loans will only get declined, or there'll be delays and problems if there is undeclared information, or if the bank feels unhappy with certain information that is in the documentation. But if we do our job right, then it is relatively easy for the borrower. With regards to the most common banks, this is an ever-changing thing. We see a trend of banks from the Middle East. We've seen some banks from the subcontinent enter into the UK market to provide mortgages. And then, yes, you do have your British banks who have been in the UK for obviously a long time, and they remain lending to non-UK residents. Typical banks, common banks, just to name some, would be HSBC, who would offer leading terms for buyers borrowing for their own use. You have Barclays and NatWest International, Standard Charter, Ahli United Bank, Al Rayyan Bank, Gatehouse Bank. As I say, the list will increase, and depending upon the loan size, some of these banks will offer terms, some of them won't.
Okay, fantastic. Another question, is there life insurance linked with the mortgage?
No, it's not a condition of a mortgage to have life insurance. It's recommended, but it's not a condition from the lender's point of view.
Okay. And then another one, what is a good leasehold period for a property, and is it expensive to renew a leasehold property?
I can answer that. I mean,
Yeah.
It ranges. It depends on your outlook, but anything from 125 years is great. I mean, if you're buying for a 10-15 year period, it's not going to be a family heirloom and handed down. So we don't tend to worry, because if it's going to get renewed anyway, it works out okay.
Great, thanks, Simon.
I'll just add to that, from a bank's perspective, the lease is relevant, and typically there's no exact sort of policy for every bank, but typically 70 years and above is a good lease from a lending point of view.
Okay, fantastic. And then we have another question. What's the max percentage of mortgage a non-resident can have, and what documents are required?
The max loan to value percentage will be case and client specific. However, as a high level, if it's a buy to let, 75% will be the maximum for buy to let purposes. For own occupation, again, 75%. However, there are some lenders who can extend to 85%. The documents required, we've mentioned ID, proof of address, proof of income, bank statements, and proof of deposit.
Fantastic. And then one final question. So we have Anonymous here. Will I be able to buy an off-plan residential property under a new holding company and apply for a mortgage under the new company?
Yes and yes. It's very common for both UK and non-UK buyers to buy property through special purpose vehicles, limited companies in the UK, purely due to the changes in income tax, which we can discuss with the client in more detail. But yes, you can get a mortgage in a UK limited company name, in a offshore company, in a trust, or in a multi-layered structure. So all of those ownership structures are possible. But I would say that yes, the mortgage number of lenders who can consider, and the interest rates may change according to their ownership structure.
Okay. Oh, sorry, I just got one last question that's come in. Is there an age limit for getting a mortgage? So if you're over 65 years, for example.
There is. It varies again between lenders. The typical, it would be up to age 70 or 75. Again, if it's client specific and somebody is an income stream beyond that and the bank feels it's suitable to lend, it can go to age 80. But as a rule of thumb, 70 to 75 years old would be the maximum age at the end of the mortgage term.
Okay, so got a few more coming in. I think everyone's getting very interested, which is great. So is it easy for a UAE-based borrower to take a mortgage, and what is the minimum loan amount?
Again, with the easy word, it's about due diligence, making sure we meet the lender criteria. If we do, then yes, the process is straightforward. UAE, to be fair, is one of the more favoured jurisdictions in the countries in the world. Some countries, due to the risk index, it's more difficult. So UAE is relatively straightforward in that respect. The minimum loan amount, that's a good question. It does vary between banks, and that can rule out certain lenders when we're looking at terms. 100,000 would be the minimum. Some may be 250,000. Some can be $1 million. Some can be 3 million. But I would say 100,000 as the rock bottom minimum. Okay,
that's great. So we have just had one more question come in. I don't know, Sahel, if you'll be able to answer this. So what's more important from a lender's perspective for buy-to-let, rental from property or personal salary income?
Yeah, again, it's a really good question. So it varies between lenders. The majority will be looking at your overall affordability. So they'll take into account your income, your mortgage or rent where you live, the rental income from the property you're buying, and they would want to feel comfortable that the applicant can afford the buy-to-let mortgage if there are any void periods in the property itself. There are some other lenders for non-UK residents, for example, Gatehouse Bank, who focus primarily or solely on the rental income. So they would say, we require the applicant to have an income of, say, 25,000, and then the rent must cover the interest in a interest cover ratio. It's an assessment of stress testing. So it can be done from both perspectives. Majority will look at your overall affordability. Some will look at just the rent.
Okay, fantastic. Okay, that's all the questions for now. But if you do have any more questions, or you would like to book a one-to-one appointment with Sahel and talk about your property that you have looked at or that you're in the process of purchasing, then he'd be happy to go through in more detail with you. So just send an email to the email of offplan@chestertons.com and we will put you in touch. And also, if you've been in touch with either Rami or Simon, they can help you with your property search and also put you in touch with Sahel. So thank you everyone for joining. We hope today was really informative, and we look forward to discussing with you more in detail after the session. Okay, thanks everyone.
Thank you.
Thank you. Goodbye everyone.
Bye bye.